What's up, traders? Welcome back to my channel. In today's video, we have a very important topic. We're going to discuss how you as an individual trader should be looking to file your taxes, how we can lower that tax bill for you, and I'm going to give you the steps, the path that I've taken to put myself in the best financial position possible to continue to grow my trading account while paying as little in taxes as possible. So if you're ready to get into this information, this is stuff that most trading coaches, trading gurus don't want to talk about. Everybody always just says, go talk to an accountant, and they never go deeper than that. If you're ready to get into it, just do me a favor, hit the thumbs up button below me. Make sure you hit that red subscribe button too so you don't miss any of our future videos. Now let's get into it today. Like I said, welcome back to the channel, everybody. My name's Austin Silver for those of you who are new. Before we get into the video, like I know I just kind of took a jab at all the other Instagram guys and all the trading coaches that say, just go talk to your accountant. I have to preface this video today by saying that same thing. Go talk to your accountant, but stay through. Listen to all the information that I'm going to share with you because it's going to give you a solid foundation to go have this conversation with your accountant on. Because while we want to trust that these people that call themselves accountants really do know what they're doing, unfortunately, just as in any industry, a lot of them don't always know the best answer for you, and they might think that they do, and sometimes people are closed-minded, and then it just could end up in a really bad situation for you. I've seen a lot of people that are trading, not so much I would call them traders, like they have other income, but they're trading, and they end up owing money years later because they don't file the taxes correctly. So this video has one intent. It is not to tell you the exact way to go do it. It's to give you more information to go to the professional with, so that you as a team, you and the accountant should be working together to make these decisions for your money and where it should go. If you do need a recommendation for an accountant, drop a comment below, shoot me an email. My email is thesilverinvestmentgroup@gmail.com, and I can put you in contact with the guy who I'm using. Super smart guy. He understands what traders are looking to do and what we can do to pay very little, if anything, in taxes. But again, let's get into some basic information here. The thing about taxes is that they really should not be overlooked. The most important thing that we understand is that everybody's tax situation is going to be slightly different. But for the most part, the biggest issue that we face is that deductions for trading losses are going to be limited to our gains. And after that, only about $3,000 can be deducted against your ordinary income. So in a year where net capital losses exceed $3,000, you as an individual trader can carry forward 3,000 of those losses against further income in another year. But you're only limited to deductions for trading losses against your gains. So what does that really mean? Because I know sometimes that can sound complicated. What it means is that if you're trading as an individual, there's really two ways to file. If you're trading in the spot market, like we are with all of my videos that you see me doing with the people that I work with every day, the hundreds of traders from all over the world that are using our system, we're all trading in the spot market. Some of the guys do options and futures, but for the most part, it's the spot market. So we file, typically, if you're trading as an individual, using a 988. Now, if you're trading options and futures, you're going to be filing a 1256. There's a slight difference between them. The 1256 provides a lower tax obligation because of the way it's broken down by percentages. It breaks off the gains into different percents, kind of like the way we pay taxes on our ordinary income. But the 988 allows for that $3,000 deductions from the losses. So you can choose whether you want to file a 1256 or a 988. Even if you're trading in the spot market, you can do a 1256. You just got to file that change using an accountant with the IRS. Now, something else I didn't say is that this tax video is only talking about people in the United States. If you're outside the US, I'm sorry, I don't want to speak on that stuff yet just because I'm not educated in it yet. But as we get more of a following on an international basis, I will do more research to bring you guys that solid information. So let's talk about the 988 filing a little bit more. Like I said this at the beginning, one of the first slides, the gains are taxed at your ordinary income rate. This allows you to match your net capital losses with other sources of income and claim them as a tax deduction. But remember, it's limited to your gains. That's why this filing is really built for people that are having a losing year. So keep that in mind when you talk about when you have this conversation with the accountant. The 1256 versus the 988. Are you profitable this year? If you're not, the 988 might make more sense because you're going to be able to deduct more of that money against your overall income for the year. So now we're gonna get into the steps about how you can save money on taxes. These are the things that I've done that have helped me, and I'm hoping that by sharing them with you guys, you can then, like I said, take this information to your accountant and say, hey, Austin did this. Can we do something like this? Should it be the same? Should it be different? What other options do we have? Because again, I said this in the beginning, everybody's tax situation is different. You gotta keep that in mind. Exactly what I'm showing you here might not be the best bet for you, but it's at least a better step forward than where you're at right now, because most of you aren't even trading as a business. The first step here that I took was I opened an LLC called the Silver Investment Group. Some of you might do an LLP or a C Corp, just depending on who your partners are, who are you trading with, and those things. After we have the LLC opened, I then opened a trading account with Owanda, a regulated broker here in the United States, using the LLC. So it's called an entity account. It's not a personal trading account. I still have my personal account, but all of our money now is in the entity account. The reason for that is because it then allows me to claim more expenses than ever. Anything that I need to help me generate trading income to help that business grow, because the business there is trading. Anything there can then qualify for a deduction. So what are deductions? If you're trading as an entity, you're gonna get more tax benefits than you would if you were trading just in a personal account. The things that you can write off. First of all, I lease my car. That whole thing is a write-off because I need the car to run the business. The second thing, this room that I'm in right now, me and Riley's office, right, with the desk and everything, we took pictures of all this stuff. I'm waiting for the IRS to come say, how big is your office? Is this really an office? Yes, look at the screens, look at the desks, look at the TV. This is clearly our office. So all the square footage here of our rent is a write-off. Personal hygiene. If you need to look a certain way to run the business, that's a part of it. Office equipment, like the screens, like the software, like buying my course, all of those things, that's education for your business. All of those things, tax write-offs, and that's gonna lower your end of year tax bill. This only works though if you're trading as a business. If you have another business, and this is where again, you really gotta talk to an accountant. For example, I was getting income before from a previous business that I was doing part-time contracting work with. If you have that income already coming into you, they're looking at you almost very equivalent, I would call it not equally, but almost equivalent to a sole proprietorship LLC. The only thing is you didn't take the time to go set up the business for the tax advantages. Most people don't do that. People just want to get mad when they hear business people not paying taxes. But it's like, you got to learn to play by the rules. You can be mad about it and be mad about Trump and Amazon not paying taxes, whatever. It's business. They know the tax code. They know how to get around it. Amazon has a team of lawyers built to literally help them beat the tax code. So why are we trying to not do the same thing? The tax code is this huge book. I'm not taking the time to read it. That's why I hired a really smart accountant who can help me do all of this stuff. And that's kind of where I want to wrap the video up here with today. The business mindset, treating your trading as a real business, means that you should, number one, be working with other professionals, an accountant, a lawyer, even to the point where, like, when we talk about website development for anything that you're doing with the trading business, you want to work with professionals. That is something that goes into treating your trading as a business. This is not just when the gurus on Instagram say, treat your trading like a business, and that means don't throw your trades around, don't throw your money around, because you wouldn't do that in a business. Yeah, I guess that's a way you can take it, but treating your trading as a business means I'm gonna open an LLC or an LLP or a C Corp, I'm gonna trade through that with a regulated broker, I'm gonna get that account as big as possible to get the best benefits from the broker that I can, and then I'm gonna write off everything that I possibly can. My car, my rent, my food, my haircuts, my clothes, everything. For me, camera equipment, videos, all the editing software, all of it. It's all write-offs because it all helps the business grow. So again, it starts with the mindset shift, and it starts with working with someone that knows more than you. But now, after seeing the video here with me today, you kind of hopefully understand the steps that I've taken that have put me in this position where I'm not paying a lot of money in taxes at all relative to the amount of income that I'm pulling in. And I want you to be in the same situation. I want you to be able to take advantage of these things too, because it's not rocket science. It's just go put in the work, figure out what you can do for deductions, figure out what type of business is the right one for you to set up. And the only way I think you can make that decision 100% intelligently is by partnering with an accountant. So like I said here, drop a comment below if you need to be connected with an accountant, or shoot me an email at thesilverinvestmentgroup@gmail.com, and I'm more than happy to hook you up with my guy. Doesn't matter where you are in the United States. He's not even in the same state that I'm in. He's a really smart accountant, and he can definitely help a lot of you guys save a lot of money. Because, and this is the last point I want to make, the idea here is you want to pay as little in taxes, but you also want to make a lot of money. But if you make a lot of money, you're going to pay a lot of money in taxes. So how do you get around that? Well, you learn how to deduct through trading as a business. You learn the tax code so you can take advantage of as many things as you can, and you work with a smart person who will confirm to you those ideas. Hey, we can do this. Hey, we can't do that. We can do this. This is a whole thing you never knew about, Austin. I'll be like, wow, that's a great idea. Bam, we can save money save tax money by doing that. So being open-minded to those new ideas is so important. Being willing to work with other people that you have to say, hey, you know more than me. Give up the reins. It's okay. This stuff, this accounting stuff, literally is the reason I dropped out of college. And now I'm running my own business with Riley, and I don't have to know more than this really because I work with a really smart guy. So drop a comment. Let me know if you need to be connected. Get these steps rolling. I know it can seem intimidating, but if you're taking trading seriously, there's no reason to wait for forming the business. You should be trading as a business to start being able to take advantage of these write-offs, or you're just gonna owe more money come tax season. So I hope the video helps, guys. Drop a comment if you need to be connected. Drop a comment, let me know if it helps. That'll let me know that we should talk about this more or not. Make sure you're subscribed, and I'll see you in the next video.